And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Frank Holland, in today for Bob Pisani. We begin by tracking the flows. More big inflows for U.S. equity ETFs in the first half of the year, with a net gain of $219 billion and just over $3.8 trillion in total equity ETF assets. That now bumps up the overall ETF market to just north of $6.5 trillion. There is no question the growth trade came roaring back in June. Big tech and the Invesco QQQ Trust leading that charge, with the value-oriented plays like financials and inflation trades like gold kind of taking a back seat. But is this a trend that will last? Joining us now, Dave Nadig. He's the Director of Research at ETF Trends, along with Jay Rhame, CEO of Reaves Asset Management. Gentlemen, thank you for both being here.
Hello.
Thanks for having me.
Hello, we got you there. All right, so Dave, we're going to kick things off with you, if you don't mind. Give us your sense of what to expect in the second half. How will the looming threat of inflation play into the whole value versus growth dynamic?
Well, we have actually seen a pretty strong run for value flows over the last 4, 5, 6 months. So investors are clearly looking for those opportunities. I don't think we've seen the small cap rotation a lot of people are talking about, but I do think value is back, and we see continued interest in things like dividend plays. And I think that shows investors really hunting for income, right? We've seen a lot of interest in fixed income that solves problems, like, for instance, TIPS, which obviously can help you with some of the inflation side of the coin, or munis, which can help you with some of the tax issues that I think a lot of investors and advisors are really worried about going into the second half of this first year in a Biden administration. So I think we're seeing a lot of tactical usage of really interesting ETFs. But meanwhile, as you pointed out, the flows are really unstoppable. It's been Katie bar the door for everybody. We've seen huge uptick from retail investors, from financial advisors, and from institutions.
Jay, switching gears, hope we got you on the line now. Let's talk a little bit about utilities, a sector that often gets overlooked, down about 13% from its 52-week high today. Do you see more room to run with utilities and the infrastructure deal?
I do, yeah. And, you know, what Dave was just saying about really income and income growth, you know, utilities are a great sector for that. It's the infrastructure bill, though, is a real nice positive catalyst, I think, for the sector. You have, you know, really two tracks. The first track, the bipartisan deal that was announced a couple of weeks ago. There's spending significant money available for electric transmission, grid resilience, electric vehicle charging infrastructure, stuff like that. You know, all that's kind of incremental to growth. And then you have the clean energy side, and this is really the big upside for the sector. There's been talk about extending the tax credits for wind and solar, even creating a new tax credit for nuclear production for existing nuclear facilities, and then a standalone tax credit for battery storage. So as it stands today, you know, wind and solar have declined in cost by about 75% over the last decade. Today, they're just about the cheapest sources of new power anywhere in the country. And so when you factor in the effects of these tax credits, a couple more years of cost declines, you can get to a path pretty quickly where building brand new wind and solar plus battery storage is actually going to be cheaper than just operating existing fossil fuel older power plants today. So it creates an interesting dynamic for utilities to really you know, transition the grid to more renewable energy and do it in a cost-effective manner. And you know, it should be a nice growth opportunity for the sector. As you're saying, they've really underperformed recently, and I think a lot of that's been focused on interest rates, higher inflation expectations. But you know, once you get past that and look out to the longer term, there seems to be a nice catch-up trade opportunity there.
Dave, I want to head back over to you. Jay's really highlighting some of the things that might be a tailwind for utilities. But I have to ask you a question. I don't know what part of the country you're in. What part of the country are you in right now?
I'm in Western Massachusetts.
Okay. I live down here in the New York area. We have these stores called Wawas, not publicly traded, so we can talk about them. Every time I go to one, they're building tons of electric vehicle charging stations. Is that another tailwind for utilities? Because whether we like it or not, whether you like internal combustion engines or you like electrics, it's all going towards electric, whether it's a vehicle, even, you know, eVTOLs or EVAs, whatever you want to call them, everything's going electric. Is that a long-term tailwind for these utilities?
Yeah, absolutely. I mean, I think it's very clear that we are electrifying the world's developed economies. That is happening very quickly. And it's happening not just with electric cars, right? It's happening with solar power in homes. It's happening with people transitioning into new sources of energy. I think we're going to see a lot of diversity in these plays. As we think about the infrastructure play, I think utilities is an interesting angle. However, I'd point out that historically, big government spending on infrastructure doesn't really roll directly into the pockets of publicly traded companies. It's not really supposed to. It's supposed to end up at that state level or the municipal level where they're actually fixing a bridge, or they're actually building a road, or they're actually building a municipal broadband system. Those are great projects, but they don't tend to hit the public markets. The two ETFs we have to play this really are PAVE, P-A-V-E from Global X, which is a great way to try to play that on the US side, or NFRA, which is sort of the international version of that. But the tailwinds there, I think, are largely about sentiment more than the direct revenue from A to B. The utility space, I think, is generally much beleaguered and does have some interesting opportunities. But you really do need to pick and choose there. If you're really focused on green energy, plenty of great green energy ETFs out there.